Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. It's Monday morning, and I'm really happy that I have the chance to talk to Jorge Ganoza, who is the CEO of Fortuna Silver Mines. And we want to get an update because a lot is going on in the company. Good morning. How are you, Jorge?
Good morning, Jochen, and thanks again for the opportunity to speak to your audience.
Yeah, thank you very much for taking the time. I know you are extremely busy because a lot is going on in the company. Let's dive directly into it because, you, I wouldn't say shocked the markets, but it was a little bit, funnily received, I would say, that you are offering a convertible senior note. But I'm pretty sure you have a very good reason to do so for those $150 million.
Yes, as we've been informing and communicating with the market for close to a year now, we have entered into a cash harvest mode with the completion of our flagship asset, Seguela. And since then, a top one priority for us has been strengthening the balance sheet, but even more than strengthening, Jochen, putting together a fortress balance sheet, right? Times like these are times when mining companies need to put together balance sheets that helps mitigate the risks of the business and help also capture the opportunities that emerge in the different jurisdictions where we operate, right? So
Mhm,
you have seen us pay $40 million towards our corporate credit facility in the third quarter of last year. We followed in the fourth quarter with a $41 million payment. And then in the first
mhm,
quarter of this year, another $40 million. No? So we've been paying down our debt aggressively. And right now, what we're doing is through the issuance of the convertible, we're exchanging money that costs us 7.7% interest for money that costs
mhm.
us 3.75. So we're lowering significantly the
Oh,
cost of our capital, no? Again,
mhm,
and second, and more importantly perhaps, is that the current structure of the corporate facility is very restrictive on covenants. Uh,
mhm,
the convertible has the most flexibility. And let me help you understand this a bit and tell you why this is important. Today, 40%, 35 to 40% of our NAV, no net asset value, resides with the Seguela mine, which is a wonderful, great asset that will thrust Fortuna for many years in terms of production and performance. But if something were to happen, let's call it anything, an operational issue, a
mhm,
geopolitical issue, even a climatic issue that has an impact on production, three things will
mhm,
happen. The first one is our cash flows will be impacted negatively. Second, our share price will come down. And third, the
mhm,
restrictions on the covenant, the restrictive covenants that we have on the facility will probably restrict and lock the liquidity we have available in the
mhm,
credit facility, impairing our ability
mhm,
to manage the challenge and the problem, right?
mhm,
Uh, Last year, when our shares were trading at $2.70 and we have the share buyback program in place, for example, we wanted to participate in the market and buy our shares, give a return to our
mhm,
shareholders through the purchase of our shares when our shares were trading at $2.70 US. Well, we couldn't do it. We couldn't do it because we had a lawsuit in Mexico. And because of a lawsuit in
mhm,
Mexico, the entire credit facility and our liquidity was restricted. We could not provide returns to shareholders while that lawsuit was going on. We're a company with five
mhm,
mines, right? So that is the restrictive
mhm,
nature of the facility. So we are getting rid of the facility. We're paying it all, lowering our interest rates from almost 8% down to 3.75, And we're providing the
mhm,
company with the most flexible structure to manage the risks of the business
mhm,
and help us capture opportunities as they emerge. That's what we have been doing.
mhm. Super. So it looks to me like now a really positive strategic move with, let's say, a future positive dilution because you get rid of all restrictions.
You know, the convertibles come with a potential dilution that in this, we're a $1 billion business, $1 billion in terms of sales,
Mhm,
no? We generate
mhm,
revenue for
mhm,
$1 billion, and this is $150 million on a credit facility
mhm,
where the principal is payable in 5 years, subject to potential refinancing or a conversion,
mhm,
or we can pay it down, no, depending on circumstances.
mhm,
Either we pay it or it converts
mhm.
5 years from now, no. If
Yeah.
there is dilution, if there is a convert, it will be probably 7%, 6, 7% dilution if it
Mhm,
converts. And again, helps mitigate the risk. Jochen,
mhm.
uh, this is a very capital intensive business and a very risky business.
Oh, yes.
And a very risky business.
Mhm,
No, there is operational risk, geopolitical risk, climatic risk now these days, and all of that. We were just talking off
mhm,
camera about the unusual
mhm.
rains uh,
Yes.
that we're seeing in certain
In
parts of
Switzerland,
Europe,
yeah.
in Switzerland. You know, so we need to be
Yeah.
able to shield the company, and what we're doing is shielding the balance sheet of the company so
Mhm,
we can manage all of those risks. And that's something we've been stating
mhm,
to the shareholders and investors. We are going to put together a
mhm,
fortress balance sheet. And this is very much in line
mhm,
with that. And I think it minimizes the impacts. Now, the market response, as you pointed out, Joaquin, was as if when on announcement of the convertible, as if we had a catastrophic failure, as if a tailings facility failed, or we had
mhm.
a slide in
Yeah.
an open pit or something tragic
Mhm.
like that. You know,
Yeah.
you
Yeah.
know, uh, when you do things like this, there is technical shorting on the part of hedge funds. There is momentum trading, no, uh,
Mhm. Algos. Mhm,
algorithms, everybody,
mhm,
and they're, I respect them all, but all sort of trading and short-term opportunism comes into play. Everybody trades the stock. We
mhm,
traded over $100 million for 2 consecutive days. I see it on the positive side that
mhm,
on the second day we traded up with over $100 million of
mhm,
trading in New York, and if I consider
mhm,
Canada, close to $120 million in trading with an uptick on the stock price. So you
mhm.
know, I watch the stock, but I don't run the company looking at the stock. Unfortunately, I have
Of
to
course.
run the company looking at the
Yeah.
risks and
Yeah.
opportunities of the business. And
Mhm,
the stock. There is no reason why the fundamental reason. If
mhm,
anything, the company is better, stronger, minimizing the risks for the shareholder.
mhm. Definitely. Yeah, let's talk shortly about the company because there is also something you had to celebrate. Yeah, the Yaramoko mine reached the 1 million ounce gold pour milestone. So that's fantastic.
That's a really one of those mines that continues to give. That mine was brought into production back in 2016, no?
Mhm,
So it's getting
mhm,
close to its 10-year anniversary as well. And
mhm,
when we acquired Roxgold back in 2021, that's how, Yaramoko came
mhm,
into our portfolio.
mhm,
Uh, that mine was set for closure in 2023. It was set to exhaust reserves in
mhm,
2023. But to the contrary, instead of that, we had an exceptional 2023. We're having an exceptional 2024. We're looking to a very strong 2025. And as things stand today, we will be exhausting reserves now in 2026. But I
mhm,
advanced to you that I was in Africa, a week ago, 10 days ago. and
mhm,
visiting the mines, visiting our projects. And, we are all very excited about the opportunities for discovery that we still have on Zone 55 Deep, which
mhm,
is where we've been expanding the life of mine. So, I wouldn't be surprised if through continued success with the exploration, we can
mhm,
see Yaramoko going into 2026 and into 27. No?
mhm. Super. And you are also spending a lot of money for exploration in addition. So, I mean, success is not guaranteed, but it's very likely possible, right?
Well, you're not gonna even have a chance if you're not spending the money, and we are
Yeah,
spending the money. This year
exactly.
we have our largest. This year we have
Mhm,
our largest exploration budget on record,
mhm,
$41 million, and I can advance to you that we are right now expanding our exploration budget to roughly $46 million based on the
mhm.
opportunities that we are seeing in some of our targets.
Mhm. Okay, super. Another mine which we're also going close to its end was San Jose mine in Mexico, and but you intersected fantastic drill results here at the Yessi Vein. So how is that going on? Because it's already like 6, 7 weeks ago when we met us and spoke. So how is it going there? Because I think you have put a lot of work into that still, right?
Yes, we still need to produce a resource. We're drilling, advancing with
Mm-hmm,
our work, and I expect that this second half of the year we will have a resource. We yes, it was a very exciting discovery.
mm-hmm,
It came a bit late, no? It came a bit
mm-hmm,
late last year, uh, but we're drilling aggressively, and I cannot tell you right now if Yessi will allow us to go straight continued mining,
mm-hmm,
because there are three options here, Jochen, for this mine. One is one I just mentioned, we can continue mining. Second is we have to play the mine on care and maintenance while we continue exploring.
mm-hmm,
And third, we decide that there are no more opportunities here and we trigger a closure plan.
mm-hmm,
I cannot advance to you right now which of the three avenues will be taken, but we're working on the three, no,
mm-hmm.
and
Of course.
continue exploring aggressively. So, in the third quarter, we'll have a better idea and we'll be able to inform the market on
Mm-hmm.
which of the three avenues will be taken.
Okay, super. Um, if you look at now it's 10th June, so meaning the first half of the year is almost over. If you look at this quarter now, are you satisfied with the production numbers? I know it's too early to say what is coming out, but so far, are you satisfied? And I think the markets are playing for your company because my feeling is the average gold price for this quarter is more likely $2,300 an average, and silver probably $30, which is much higher than the first quarter, which would help you also a lot to generate a beautiful higher free cash flow, right?
I'll help you because I have the prices very fresh on my mind. In the last quarter of last year,
Hmm.
no, the last quarter of 2023, our average price for gold was $1,990.
Hmm.
In the first quarter was $2,087. And
Hmm.
right now, as you well pointed out, we're selling gold probably at an average of 2,300 plus,
Hmm.
right? So we are set up to capture the opportunities of a rising metals prices. Absolutely.
Hmm.
We have tremendous opportunities. We have had some challenges as well. As we inform the market, for example, in the Ivory Coast, we've been contesting with power shortages, intermittence in the power availability. We expect those issues are going to be resolved in the month of July. But in
Hmm.
spite of that, we have not modified our guidance for the year, right?
Hmm.
We have not. We believe we're going to meet guidance. We're tracking well. All the mines are performing and delivering according to plans and budgets. So we're feeling very calm, very good. There are
Hmm.
always challenges everywhere, always things to contest with, but they're all being adequately managed.
Hmm. Absolutely, yeah. And if I just doing some mathematics, you produced last year, no, sorry, for this year, let's say the equivalent production is set at around 457,000 to 497,000 ounces gold equivalent. So if I take here the average price higher, I mean 200 or $250 more in average is, yeah, what is it? Over 100 million. That is beautiful.
We're gonna generate over
Yeah,
$1 billion in sales. Probably
exactly.
over $1 billion in sales in revenues this year. 85% of that is attributable to gold, 10% to silver, and the balance is more by-product lead and zinc credits. No, because the figure you just gave is a gold equivalent production. No,
Hmm.
that's our target. No,
Hmm.
we inform the market. We target gold, silver production, base metal production. But then, just for reference, we provide this range on a gold equivalent basis. I think it helps the investor. Um, so yeah, we should be in that range, and we're traveling well to meet that, and hopefully
Hmm.
end up on the upper end of guidance. Yeah.
Yeah, yeah, no, absolutely. That looks great to me because I think it's straight profit because your costs will not change significantly in that short term. So from that side, that's very good. I have my last question is about Diamba Sud, the gold project you have in the Senegal, which hopefully will be then your sixth mine. How's it going there?
It's advancing well. This
Hmm.
Diamba is our largest exploration budget. It's about
Hmm.
$11 million
Hmm.
between exploration and early engineering, early studies in support of a feasibility study, right? So
Hmm.
it's not just exploration. We're advancing with certain works that could be a long lead item, no, a critical path. So we're trying to remove
Hmm.
those critical paths
Hmm.
early on. We're doing, our biodiversity study, capturing weather patterns. We need at least 2 seasons, no, at least two
Hmm.
seasons of good measurements,
Hmm.
biodiversity as well. So we're doing all of that as well, and we expect to produce a resource estimate this year. We have 3, 4 drill rigs turning on, moving across different targets in the property. We are going to start doing a reinterpretation of and reassessment of all the geologic core drilling, exploration drilling, with the aim of having a well supported resource estimate by
Hmm.
year end. Remember that when we acquired Chesser, and with that Diamba Sud, uh, we did not incorporate the Diamba Sud resource into our inventory. We're
Hmm.
treating it as a historic resource and put it in an appendix.
Hmm.
And we decided to do that because I think it's a prudent thing to do until we can do our own drilling, and then with our geologic understanding, produce our inaugural Fortuna inaugural resource estimate.
Hmm.
I think Chesser did excellent work. They made a brilliant discovery. It's a very exciting one, but until we can call it our own, we
Hmm.
are doing all of this work, and towards the year end, we'll be able to produce this first resource, Fortuna's
Hmm.
first Diamba Sud resource.
Hmm. Okay, super. And that's on the path to production, of course, then.
That's on a path, yes. And as I said, for example, if I produce a good resource estimate by year end and we want
Mm,
to advance it, we don't want to be delayed by, okay, now we have to measure weather patterns, biodiversity studies for
exactly.
another year. No,
Mm,
we've
yeah.
been doing all of this along,
Yeah.
trying to keep the project flexible in case we want to take I'm not going to say a fast track approach to
Mm,
development, but we want to move at a good pace, right? We don't want
hmm.
things that could slow us down.
Hmm. Absolutely. So if you look from here, like 3, 4 years in production, is that something you would say that's
But no,
possible?
no. Let's say if we decide to advance this, I think if successful with exploration,
Hmm.
if successful with if we get the project to the size that we believe supports a Fortuna construction decision,
Hmm.
uh, that's a decision that could be made in 2025 next year. No, that we
Hmm.
decide we
Hmm.
want a construction decision. It could be made you know, next year, and then I would expect 18 months of construction. Yeah.
Wow. Hmm. Cool. But that would be fast then, 2027. That's would be a great date to
Yeah,
start with.
late 2026, late
Yeah.
2026. You know,
Hmm.
this is a business that takes time, full of risks, intensive in
Yeah, that's
capital.
normal. Absolutely, absolutely. But it looks like you guys do the right job, definitely. That's why I'm a shareholder in your company, of course. I know why. No, perfect. Jorge, thank you very much for the update. That was fantastic. And yeah, I think, as said, it was a little bit sad how the market reacted, but it looks to me like now, after our 21 minutes talking, that it was a real smart strategic move, saving a lot of money and giving a lot more flexibility to the company. That's exactly what I like. And as you said, mining is a risky business for sure. It looks like to me that you managed that fantastically. So thank you very much. I wish you all the best, Jorge.
Thank you, Yoko.
Thank you. Yeah, ladies and gentlemen, that was Jorge Ganoza, the CEO of Fortuna Silver Mines. And yeah, you heard it. The convertible bond, the market reacted first of all negatively, but is already coming back to the conclusion that this probably makes a lot of sense. And to be honest, after this talk with Jorge, I'm even more convinced that they did an extremely smart move because they will save a lot of interest. On the one hand, they are replacing old debt, which was at approximately 7.75%. Now it's 3.75% the interest. But what I like also is that the warrant exercise will be much, much higher than today's price. So you have a premium in there, which I would call then, if it is exercised, a positive dilution, because this money will be used, for example, Diamba Sud, for the further growth of the company. And that's exactly what we want to see as shareholders. And don't forget, 5 mines are already in production. The 6 mines will hopefully come end of 2026, Diamba Sud, or 2027. Let's hope for that it works. And the company really does the largest exploration program ever, with approximately 46 million US dollars this year. So that is really a lot. This is an investment in the future of the company and in the growth, but also in the value of the company. So really check out Fortuna Silver. I'm a shareholder. You should be too. Thanks for watching us, and bye bye from Switzerland.